June 5th, quick one-up video for you wonderful ladies and gentlemen. A bit of mixed economic data today. We had the ADP employment number. I've often noticed the ADP number and the non-farm payroll numbers can sometimes be opposites, but the ADP number was actually worse than expected, significantly worse than expected, and I think that gave people some hope for rate cuts. The PMI composite final was good, and the ISM service index were good. I think both had upward revisions as well. Tomorrow we'll get jobless claims, but the real big show is obviously going to be on Friday with the jobs report. I think if that comes in soft, people will think the Fed is going to cut. Currently, we're about at 70-30 probability for September. As far as the VIX goes, we did break below the 20 MA. I think bulls can now use that, meaning stock bulls, over 1283 as cautionary. If we were to somehow get over high of day at 13.25, I'd be still more cautionary. On the downside, we have some reference lows between 1240 and 1181, and I'd be curious to see if we could form a bit of an inverted head and shoulders here in the VIX. I do worry that when volatility gets this low, the 1-to-1 payoff is for still lower VIX, and the 3, 4, and 5-to-1 is for higher VIX, so don't get too complacent. There is some hope. We did technically have day one of a breakout in the major market indices, but we're always on guard for look above and fails. We'll get to that in a moment. As far as the ES and the NQ go, I think you could raise your stop now to 53.49. If that fails, we'd see a liquidation break back down to 53.33.5 and likely to the RTH VWAP at 53.37 quarter-ish. If we do keep going, channel high comes in closer to 53.89, so that would be a good opportunity to trim some gains into. With regard to the Qs, there's a lot more room to the channel high, but first and foremost, it needs to hold 18,980.5. If not, there's likely a liquidation break to 18,926 quarter, and maybe even a full Monty move back down to 18,819.5, and then that would be a very key pass-don't pass line. If we were to make a move up to channel high and it did it by the open, it would be 19,380.5. As far as SPY goes, it's technically a day one breakout over the 523 high. If we stay over that 533.07, there is room up to the channel high, which will likely line up with the 1.618 fib extension from the 328 high down to the 419 low at 543.61. On the shorter time frame, if you take the 523 range down to the 531 low, the 2 times range is 547.78 and the 2.618 is 556.87. And I do think if we did see a liquidation break below the 533.07 that sticks, we could see a move down to 525.72, which is the 50% fib from the 523 high to the 531 low. Technically, look above and fails could see range low at 518.36, which would probably line up with the 50 MA by the time we got there, currently 517.20 and rising. As far as the Qs go, technically a day one breakout up over the 523 high of 460.58, so pullbacks to there are still okay. There is some short-term channel resistance just above at 468.87. If there was a move up still higher, the 1.618 is at 461.43. The 2 times range is 478.10 and the 2.618 is 488.94. If there is a liquidation break back below the 460.58 high, the 50% fib comes in at 451.82, and a full retest of the range low as defined by the 523 high down to the 531 low would be 443.06. There's also some reference support around the 321 reference high breakout at 449.34. So Qs look pretty good. I think that if there's a liquidation break on Friday from the jobs report, it likely gets bought up because that's the last day you can buy NVIDIA before the 10-for-1 stock split. It does go X on Monday, so the last day to buy would be on Friday. As far as NVIDIA goes, we did get to the 1191s that I had been looking for and even just sailed right up through it. If we make a move up to the 2.618 as defined from the 3.8 high down to the 419 low, we could see 1326.63. It is technically a little bit overbought here. The money flow hasn't really been confirming new highs, but we did close on the dead highs. As far as pullbacks go, just make sure it holds 1191s. If you want to use 1200, that's fine too. ASML was up on a deal with Taiwan Semi. I think you could use 1022.66 as a stop. It likely sees the old highs at 1056.34. It could make new highs after that, but I'd be trimming after coming up from the bottom. There could be some muscle memory at the old reference highs. As far as Apple goes, it's into the 124 reference old lower high at 196.38. I used the opportunity and pump up to there and actually a little bit above the interim channel high to book gains right at the open. I know Apple often sees liquidation breaks after modest up opens, and I have been telling you that we've been seeing some sellers come in above 195. If it does keep going between 196.38 and 198.23 is a resistance zone, and then of course the old reference highs that we saw back on 12/14 at 199.62. I do think if Apple is up into the AI event, which is of course Worldwide Developer Conference on Monday, which actually coincides with NVIDIA going X, it's a good opportunity to sell into, particularly if the market's up on the NVIDIA split and going into the Apple Worldwide Developer Conference event. Could see a little bit of a sell the news. I do think it'll be an opportunity to buy the dip, but wait for it. GameStop was up pretty nicely again today. I actually used the pump into the close to book some gains there. It had a up open a couple of sessions ago up at 40.50. It sold off completely after that. A lot of people are making hay that Roaring Kitty has near dated options that are coming due, and that could cause him to have some problems because maybe he doesn't have enough money to cover it to get it up to where it needs to go, and if those options expire, he may be forced to sell. I notice a lot of the same people, like Andrew Left, for example, who shorted GameStop during the pandemic, are back at it again. And it seems like the squeeze could be on again. I don't necessarily think it's going to go up to 500 again, but I would use the opportunity into rallies to trim gains, but I don't think it's a short. If you're currently long, I think 31s to 30 is a good stop. Don't let it get below there on you now. Tesla not getting the best news. It seems that BYD, China company, is really eating their lunch. I had tweeted out some statistics that Tesla is actually seeing erosion as BYD is seeing gains. They're just outpricing them, and their product is actually pretty good quality. As far as the Tesla bull case goes, it needs to get over the 100 MA, currently 180.93 and falling. It was resistance both on 429 and 521, but it seems to be making lower highs. The 50 MA is right here at 172.15, so that's sort of pretty do or die. ServiceNow, we had talked about this in the midweek video. I said I thought it could get a rally back up to the 11.421 old high at 707.60. We're pretty close to there. A good opportunity to trim some gains if you've been long on the dip. Not sure that I would short it there, but if it did get a move up to the 20 MA at 726.21, I probably would there. The reason it was up was because of CrowdStrike. That got a pretty nice move up. I think if you're long, you could use the 20 MA at 332.45 as a stop. If there's a morning pullback, you could play by the dip there with a tight stop below. The next stop on the upside would be 353.32 and maybe a move back up to 358.84. A lot is going to hinge on the dollar. It's been fairly cooperative for the bulls. It did stall on the check back to the 104.438 to 104.522 level and pulling back. I'd be careful now if it got back up over the 200 MA, 104.442. If it does keep coming down, 103.817 is the next really big support. It lines up with channel low as well. TLT is rallying. I told you originally I thought we'd get down to 89s and 88s. It wouldn't feel good getting down there, but I thought it would hold. Now we're up into channel high. There is some room to the 328 gap fill at 94.62, but I would be trimming up there. We had a liquidation break today that held the 100 MA at 92.41. And the breakout as defined by the 516 high, 92.42. So I think you could use those areas as stops. If there are pullbacks to there, it could be consolidation for still higher. Below, I do think we see a liquidation break. And if it were to steamroll below the 92.05, which is the 200 MA, I think we have rates as a problem again. Currently, it's been a tailwind. I know a lot of traders get very nervous when interest rates start falling very quickly because they think recession is imminent, but when things calm down a little bit, it does lead to higher PE multiple premiums. Stocks love low rates. If it gets really spiky from here, then we'll reevaluate. Bitcoin acting well, consolidating just below the 72,495-ish area. I'd be careful if it lost 70,840 now. I think that's a good raise stop. If we can hold here and build on this, we could see a retest of the 74,415 reference highs. Generally speaking, I think the market is trying to stay strong into the NVIDIA split and the Apple event. I do worry that it is rallying on narrowing breath. Today, we were basically 2-to-1 positive of both the NYSE and the NASDAQ. The AD line was only 887, which is rather weak. It wasn't even into the triple digits. It opened at 1303 and just took a swan dive after that with a meek recovery. Ticks were very middling in the ES. They were very positive. I think every single tick body except for one closed above the zero line in the NASDAQ. It seems that big cap tech is dragging the averages higher. NVIDIA, I think, will again remain strong into the split. Usually it opens up after a split. We'll see how it trades after that. I think we'll be able to use Monday's range as a gauge, maybe even the opening 15 minutes. I do still think up opens are good opportunities to trim profits into and raise stops. On Friday, we're going to get the jobs day number. I would imagine a liquidation break in that probably gets bought up quickly because of NVIDIA, but we will have a jobs day range to trade against. Again, next week we'll have the Fed on Wednesday, but in the interim we'll have a jobs day range. So anything above that is bullish, anything inside is neutral, anything below is bearish, and then we'll flip over to the Fed day range come Wednesday. That's it.